DOHAS, like I mentioned a little bit earlier, is one of those ones that most people generally know about. I do find though that a lot of times there is misinformation out there. The boys and the girls there get talking in the breezeway or the lines, and they do get mixed up a little bit sometimes. But hopefully we'll allay some of those that misinformation there. So you can see there, it is for current and former ADF members, which means that if you're in the Defence Force and if you're out of the Defence Force, it can still be available to you. It is also for your own home ownership, which means that you can't go and use it to buy an investment property. However, if you've gone, purchased your own home to live in, posted out, kept it, you do still keep receiving your DOHAS subsidy, and it essentially becomes an investment property, and you're getting your rent on top there as well. Now this number here has changed just recently as of June just last year. Must have served within the last 5 years. That used to only be 2 years.
Yeah.
So there's a lot of people out there right now who could be thinking that, nah, I've already gone 2 years past discharge, it's lost to me. Good news, you may still be eligible to use DOHAS if it's been within that 5 years of your discharge. Now, you've got a couple of references there for the DEFGRAM and the DOHAS Act for that 22 June when that changed to 5 years if you want to check out on that. If you do have a breaking service, there is the potential there that you may have to start again. There is a qualifying period associated with it. If you have a break in your qualifying period for over 1 year, then you may go back to day dot. You may go back to zero and have to start that qualifying period again. There is also the potential there that you have a break in service during your accumulation period. If you have a break there, it generally just means that for whatever period you've had a break, it's generally that you just don't accumulate your DOHAS subsidy during that period. Once you start again, you just start accumulating once again. It's pretty good. Now the way they work it out, and all the numbers there, it's worked out on the average house price across all of Australia. So what they've worked out there, that as of 1 July 2020, the average house price across all of Australia was just over $750,000. In brackets there, you'll see $718,000. That was the average house price for 2019. So you can see we've actually gone up about 30 grand since the last time was calculated. Looking forward to June, July 2021 this year to see what it comes out.
100%. So updated every 12 months, right? And that's financial years as well.
Yeah, financial year. Now, the way that the tiers are worked out is based on that average house price. Tier 1 is 40%, Tier 2 is 60%, and then Tier 3 is 80% of that average house price. What do those tiers look like? I'm glad you asked. I've got it here on another slide.
Brilliant.
Subsidy tiers on the left there. You can see minimum permanent service is 4 years, 8 years for Tier 2, 12 years for Tier 3. And then our reserve brothers and sisters there, unfortunately you do get shafted a little bit. 8 years for your qualifying period for Tier 1, 12 years, and then 16 years for Tier 2 and 3. When we're talking about how much you can actually have subsidised, this is what we see in this subsidised loan amount. Tier 1 is $300,000, 2 is $450,000, and Tier 3 is $600,000. These numbers here, that's not the most amount of money that you can buy. The most amount of money you can buy is going to be determined by the lender, by the banks, based on your personal circumstances. These figures here just tell you the maximum amount you're going to receive a subsidy on. Now, when we also look at your your maximum monthly subsidy, these are based on the average interest rates and they're calculated monthly. So for somebody, the guys out there and girls that you might already have a DOHAS loan, you may see your monthly your monthly subsidies changing slightly. That's for that reason. So Tier 1 is up to $198,000, Tier 2, $298,000, and Tier 3 up to $397,000. So if you've taken out a loan and your Tier 3 and your loan is larger than $600,000, you're going to get that full $397 a month. Not too bad.
Not bad, $400 a month, is it?
That's it. Now, unfortunately, as discussed, and we do get a lot of discussion around this, there are only the 3 banks that you see there that you can use for this subsidy. You've got the Defence Bank, the Australian Military Bank, and the NAB. I know that Dan, in one of the previous sections, has already discussed the interest rates and how they can be variable, but we are seeing some very sharp rates at this point in time, especially with the NAB there. A couple of extra points here which aren't really common knowledge for a lot of people. The most or the maximum subsidy that you can receive is up to 20 years. If you wait until Tier 3, the amount that you're going to get there, based on that maximum amount there of $397, is about $95,000. That's pretty good.
Yeah.
Better than a kick in the teeth, I always say.
100%.
As interest rates go up and down, that amount there can change. So as interest rates go up and those monthly subsidies change, that can increase there. And what we do have is the ability there to get an additional 5 years if you do have Woolworths service. They have broken it over a few months, so 3, 6 and 9 months, based on giving you that maximum 5 years. So potentially 1 or 2 deployments overseas would get you up to that additional 5 years. Unfortunately, the 5 years of additional Woolworths service doesn't go towards your accrual phase. You still need to meet your normal 4 years, 8 or 12 to get your subsidy tiers. It just tacks on to the back end, gives you a little bit of extra time of receiving that subsidy. Nice big red caution here. If you do have a DOHAS subsidised loan and you discharge, if you don't do more than 20 years, you are going to revert back to Tier 1.
Yeah.
That can trick a lot of people up, so they do have to be aware of it.
Yeah, it isn't common knowledge, right? A lot of people think once they hit that tier, that's where they remain, but no, 20 years is the magic number.
Yeah, so if you are considering discharge and you are close to that 20 years, try and stick it out. Alternatively, there's another way they can meet those dates.
100%. So if you are going to go into the active reserve, 20 days is your magic number. If you're not going to satisfy 20 days, you aren't going to keep ticking up your tiers. So just remember that when you get out, you go like, oh, I might just do 10 days or whatever like that. That is going to negatively affect you. 20 days is the magic number, okay? So make sure you do that. It also goes into your private health as well. You get $600. Not bad either.
Nice.
But make sure you just hit that tier limit there at 20 days.
Sweet. Now, one of the other elements of DOHAS as well is the ability to receive a lump sum. Now, the way they do that is they take a portion of your entitlement and convert it to a lump sum.
Yeah.
You can only take up to a maximum of 4 years though. So, for example, if you did want to take the full 4 years as a lump sum, then you would have to have served 8 as a full-time member. 4 years for your qualifying period and then 4 years to convert that to your lump sum then. Now, unfortunately, even if you have served and you've got your Tier 2 or Tier 3, it's only going to be paid out at Tier 1. So you have to weigh up whether it's more beneficial to receive that money as a lump sum or to just leave it there, bubbling away, and then potentially get it at Tier 2 or 3 and get a little bit more money that way. Now, if we've done some numbers here for you based on the current entitlements, $198 a month over the 4 years, about $9,500.
Not bad.
Not bad. It isn't taxed. It's a tax-free number. However, it is a fringe benefits tax. So once again, if you're on family benefit A or B, paying child care benefits or something like that, it may affect those numbers there. So make sure you do talk to an accountant if you are considering that as well. Now, it can't be used as your deposit because it's not going to get paid to you until you actually have your first DOHAS subsidy payment there as well. That is generally after you've drawn down from the loan. Now, another note here as well, if you have owned an occupiable home before, then unfortunately you can't get that DOHAS subsidy as a lump sum. What I do want to make very clear though, is even if you have owned an investment property before or your own home, all of these ADF housing entitlements are still available to you. You don't lose them just because you've lived in or bought an investment property before. It's only this lump sum here which is affected.
Just stick it back on the shelf, right?
That's it.
Absolutely.